Good morning folks, this is Naeem Aslam, Chief Markets Analyst at AvaTrade. Welcome to our daily fundamental video analysis. Let's begin by looking at the US session. The three major indices over in the United States are still very much in an upward trend. Yesterday, the two indices, and I'm speaking of S&P 500 index and Nasdaq, closed in positive territory. As you can see in the chart, the S&P 500 index is still relatively much stronger index as compared to the Dow Jones index. The momentum when it comes to the S&P 500 index is certainly there, and that is why it is still gradually moving to the upside. Yes, yesterday's gain were very minuscule. There weren't really that much of any monumental gains for the US indices. Nonetheless, we still had two indices closing in positive territory, leaving the Dow Jones index in negative territory. So what happened after that? Earlier in the morning today, the US futures were down well over 1%, meaning well over 200 points. And investors were very much looking at the momentum where they left off over in the United States, and they were ready to build up. But now what is happening is that momentum, the negative momentum, where the Dow Jones futures were trading minus 200 points, they have reclaimed some of those losses, and now it is down only by 0.29%. Why? Well, not any specific reason with respect to monetary or fiscal policy, because if we look on coronavirus on the coronavirus front, yes, there are certain cases where we are seeing still some sort of uptick with respect to coronavirus. But investors or traders, they are still shrugging off all those concerns, and they are very much in a mood that, okay, let's continue with the risk on mode. And that is what really pushing the markets. Over in Europe, this is why we're seeing all the major indices such as FTSE, IBEX, CAC, Stock 600, Stock 50 trading to the upside. But once again, I wanted to highlight this caution that these gains, they are again very minuscule. We are not seeing any significant significant moves to the upside or any major spike with respect to the European indices. But there is one important element for traders to note. That is the price action of the volatility index. Now, it doesn't matter whether we are looking at the VIX index, which pretty much measures the volatility for the S&P 500 index, or V2X, which is the equivalent of the volatility for the European stocks. They both have started to move to the downside, and as you can see in the chart, the volatility index VIX is trading somewhere in around 28 now, and then the futures are trading right at 28, but the VIX VXX index is still trading slightly more higher with respect to that. Now, moving into the commodity space, the precious metal gold is still struggling, is still very much in war with the 1700 mark. As you can see in the chart, the price isn't really finding its strength to stay above the 1700, and for the bulls it is really critical for the price to remain above the 1700 mark. Otherwise, it is highly likely that these bulls who are really aiming for the price to touch 1800, they are likely to endure pain. Why? Because prices are likely to move to the downside. To finish off, in the commodity space, what we are seeing is another uptick day, another day of gains as the rally continues in oil prices. But once again, folks, the price is already trading where it should be. With respect to the West Texas June contract, which is about to expire very soon, it is trading at 24. The December contract is trading at 30. So somewhat there is a lot of balance over here, because I really don't see how the prices can really surge above the $30 mark by the end of December. Under the current circumstances, that is the key over here. That's all for today. See you guys tomorrow.